Investing and financial planning can come with many complicated terms, processes, and much more. Creating a balanced investment portfolio is very important if you want to start investing. And the first part of this process is asset allocation. It is one of the main factors that leads you to your overall returns. But how do you allocate assets to create a balanced portfolio? Hello and welcome, I'm Pallavi Sharma and you're watching ET Now. Establishing an appropriate mix of stocks, bonds, cash and real estate is asset allocation, and it is a dynamic process. An asset mix reflects your goals at the time when you are creating your portfolio. Today we compare two active management portfolio strategies, strategic asset allocation and tactical asset allocation. Tell you what is the difference. Let's begin. First, what is strategic asset allocation? In this, an investor sets a target of allocation for asset classes and rebalances the portfolio periodically to get targeted returns. It is a long-term strategy and the method adheres to a basic policy mix. Here you need to take into account risk tolerance and investment time frame. It is similar to the buy and hold strategy. The style of asset allocation emphasizes diversification to reduce risk and improve returns. Let me explain this with an example. Say I am 60 years old and have a conservative approach of investing. I have a strategic asset allocation of 40% equities, 40% fixed income and 20% cash, and have 5 lakh rupees portfolio, and I rebalance it annually. Now in 1 year's time, say the equity component gained 10%, fixed income gained 5% and cash gained 2%. Now my portfolio composition looks like 2,20,000 rupees from equities, 2,10,000 from fixed income and 1,02,000 from cash. The value is rupees 5,32,000 and the composition is 4.3% in equities, 39.5% in fixed income and 19.2% in cash. Now what I do is remove 1.3% from equities and sell it, and then add the remaining 0.5% in fixed income and 0.8% to cash to make the ratio 40:40:20 again. Depending on my portfolio's risk, I can change the allocation after my retirement, which can be after 5 or 6 years. Coming to tactical asset allocation, so strategic asset allocation is for long run, but for short term, tactical works. The strategy shifts the percentage of assets held in various categories to take advantage of strong market sectors. And then you can get back to your original mix whenever you have reaped the profits. The advantage is that some extra value can be created in certain situations in a marketplace. So like the strategic asset allocation, we first allocate money in different sectors. Say I have the same 5 lakh rupees to go with it, and I have allocated 10% in cash, 35% in bonds, 45% in stocks and 10% in commodities as a basic mix. Now assume that the data suggests that there will be an increase in demand for commodities for the next 16 months. I as an investor would want to take the advantage of the opportunity and shift more capital to commodities now. So here I will make some changes. I will remove 5% from cash, keep the bonds and stocks as is and add the 5% in commodities. So here the portfolio strategic allocation is the same, but tactical allocation has changed. This can also happen within asset classes. Say in stocks, 45% is invested and 30% is in large caps and 15% is in small cap holdings. If the outlook for small cap stocks is not favorable, you can shift 5% small caps to large caps or vice versa. This is the flexibility that tactical allocation has allowed and strategic allocation doesn't. Remember, tactical shifts are usually from 5 to 10% or maybe lower, because a large adjustment would show a fundamental problem with the construction of a strategic allocation. It is also different from rebalancing, because during that trades are made to bring the portfolio to its desired asset allocation, which is strategic. Whereas here we adjust the strategic allocation for the short term and reverting back once the short term benefits are reaped. So the difference between them is basically the flexibility that the tactical allocation offers. If you are conservative, you can go with the strategic asset allocation, and if you are risk taking, then tactical works for you. So make sure you understand the financial markets before choosing a tactical approach, because it can be a little complicated and tricky. Now, if you are wondering how to pick investments in these asset classes, like say in equities, which stocks to invest in, check the description for a link to learn how to select stocks before investing and what are the things you need to know. And stay tuned to ET Now for such informative videos.
If you like this video, then like, share and subscribe to ET Now.